Good morning, everyone. Hope you had a great evening last night. We left the market, and I think it made it over 33, 32 degrees yesterday. Yeah, we're supposed to be into the 40s, which would be seasonal for us for the rest of the week, and I imagine most of the snow will be gone by Friday, except on the north side of the buildings. So our warm-up has begun, while the north and the east is probably still feeling the brunt of this particular storm. It was a dandy. Today, not a lot of news overnight. The stock markets, Asia, all three of the markets were lower. In Europe, the FTSE was off, the CAC and the DAX were up. Our market was off about $1.25 when I looked this morning. So got a very, very strong market. Equities are pointed higher, either on improving economics, global growth, etc. The EU actually managed to show that it had 0.2% growth, as Germany had 0.1% growth, so officially they're not in a recession yet. So the hope is China, the U.S., and Germany can help turn the world's economy around, at least keep it growing. Every year since 2009, the economic growth projections have been revised lower. And I'm sure they will be this time too. The biggest news today will be FOMC minutes from last month. The market will key off of that. They will be looking for the Fed's take on the economy. How fast is it going to grow, which will influence when they can raise interest rates, which to me is going to be very, very difficult to do. They might do it on a token basis, but they can't. The average interest rate on the entire portfolio for the Fed historically has been 5.5%, and it's in the 2.7s right now. Right now, our debt service is about $250 billion. If it were to go to 5.5% average interest rates, that would jump up to about $900 billion, almost $1 trillion, and they can't do that. So my guess is they probably aren't going to be able to raise interest rates by much. Housing starts today, generous number, 1 plus 0.28. That would be a good stat. Permits, 1.035. Those in combination with yesterday's NAHB housing index would be supportive for equities and not so for financials. So I see, yeah, the issue for us is support at 8 to 12, or is it at 4 to 8? Because the market is pointed lower and because of these numbers right here, I've got my buy starting out at 5 to 9, but it may be 13. It just depends on how the news goes this morning. And then 29 to 01. The first sell band, you can see up here, you got this P high at 21, so resistance is 16 to 20. The 15 sell is very, very aggressive. So 15 to 19 is sell one. Obviously, you'd like to get it done as close to 19 as possible because of the overnight, then 23 to 27 for sell 2. So the 15 is rather aggressive, but again, this news that we have right here popping up early will not be supportive for financials. Once this news is out of the way, we're down to crude inventories and minus 700,000 barrels is where that number is put. And again, a lot of the news services that don't know the crude oil market and really haven't figured in tight shale crude production. Historically, inventories have averaged about 380 million barrels above ground. That number is going to be taken down because we aren't as dependent upon Saudi Arabia and Middle Eastern oil as we were. So people will misconstrue a decreased inventory as bullish for crude oil, but it really isn't if you go back and you look at what's going on from a production standpoint out of the tight shale formations. So I think we're dealing with a trading range today with a lower bias. Would like to get the sells done as close to 20 as possible, but may not be possible. So we're down to the housing news. I'm going to try to buy on the cheap 5 to 9 on the idea that we do have a trading range, but it may take a 13 to get in. It just depends on how this news breaks early in the session. Okay, for those of you that are new to the room, we have a pretty extensive 6:45 a.m. briefing. We have a probably just as extensive at the 8 a.m. and then we're on at least hourly. And we try to pick up if on our updates, if we have a trade that sets up, we try to pick up and talk to a trade during the day too, to show you how to use the various charts and information. Pretty busy. You have about 6 updates plus a wrap-up. At the end of the day, which helps you trade Globex and get ready for tomorrow. Okay, we're currently at 15. Got a little extra volatility to play with here. So 19 to 23 will be sell 1, 27 to 31 will be sell 2. On the buy side, 5 to 9. And then 1 to 29. The knob spread's really hanging in pretty close to 15. It did sell, come in a little bit overnight, so I think we got a little bit more room to work on the downside. Like the sell side better, just because I think long term we've got a downward bias, and the news, if as forecast, would not be supportive for financials. Okay, the last rotate up here stopped at 98. We left yesterday's market wanting to sell the 97 to 1200 area. That still looks reasonable to me, so make it 98, 1200, sell 1. Pretty much where we had it yesterday, sell 2, 3 to 5. On the buy side, we came in last night, 89 to 91. Right here, that's pretty much where we are right now, so we'll make it 90 plus or minus. And then our 85 to 87, which is probably a better place to put it on. That'll get us below this volume, and if you buy below value, you got a chance to make money. Now, right here, this low volume area, 90, 91, right in here, that's where support is. And you can see right here at 03 to 05, these low volume numbers are where resistance are. So market is trading its structure. The biggest danger in being long is being long gold because of central bank intervention, but that usually happens on the opening of the day session. So we always have this little window when Bank of Japan, European Central Bank, Bank of England, or the Fed, when the day session opens. And they've been pretty consistent at going with $1 billion to $2 billion at the market when they place their orders, which usually takes $20 to $30 out of the price of gold instantly. So the danger in gold because of the intervention of central banks is being long. Okay, crude oil. We came in last night. We had a buy at 74. Well, really 74 plus or minus a quarter is the way it worked out. We had a 74, even 74 and a quarter, 73.50, 73.75. So just got down in a 75 area held. They got stops, and there's your London lows. So 74, 74 and a quarter, I think, where we were yesterday. And 50 to 75 would be buy 2. I mean, it's just structurally where support off. Resistance, this is very, very aggressive, but we're going to lean against 75, sell 1, and then 25 to 50 for sell 2. The situation in Israel, I mean, Israel has retaliated initially by destroying the terrorist homes, and I'm sure that will invigorate the hate in the Palestinians, fuel to the fire. But the market has, off the headlines, they rallied the market when the headlines hit, but the market pretty much came off after that, after the night session. So again, Israel's retaliation would be limited to the Palestinians, to the East Bank, and probably they said that's not much of a factor. Okay, the euro. $25.50, that's been a great number for us. And you just take a look at the chart, just eyeball it right here. It would look the same on a bar chart. But what you see up in here is selling. And what you can see right here is pretty strong selling. So this 40 to 50 area is pretty good resistance. So that's sell 1. The last rotate up here stopped at 65. So we'll make 60 to 70, sell 2. On the buy side, we're flirting with our 25.15s to 25, so we'll open it up. We'll make it 25, even 25.10. Let them get stops beneath this. Bank of England meets today to set their interest rate and their purchase numbers. And then we'll make 75 to 85 for buy 2. But I don't think the Bank of England announces those. Fitz would know better. Okay, the E-mini. It's a strong market. It's pointed up. There's 2 reasons to buy. If the economic news is lousy, the Fed's going to support the market. The economic news is better than expected, then the market can stand on its own from an EPS basis. Perversely, the worse the economic news, the stronger this market is. So it can trade up on good and bad news. We talked yesterday late afternoon to pay a lot of attention to that 53.50 area. It just enables, 53.50, 58.50, 63.50, 68.50. It enables the professional element to go gun stops again above 250 and 70.50. And I think that's what we're seeing right now. Sometimes nickels and dimes play, sometimes 2.5, 7.5 play. And right now, getting stops above the 2.5 level and 7.5 level seems to be what the market's doing. When we make new highs, especially on low volume, the market tends to pause. We've got the FOMC minutes today, so I see a trading range. And I see sellers basically at against 50. So the easiest trade, once again, is to sell failure, taking that level out. Failure to take that level out. And the issue is becomes where do we buy it. So we've got volume down here at 36, so the best buy is 35 to 37, just leaning against this high volume number. And a resting limit buy at 36.50 would put you in structurally about as good as you can get. We have the breakout here at 43.75, this little area. Coming down and testing that, we've got the London low at 45. So this market makes us pay up early to get in long. Then during the day, if it's going to sell, it'll come back to our desired buy levels. The long-term trade is to find a place to get long. The bias is still to the upside. You got this rotating down here at 39, so 39 to 41 will be buy 2. And this is the area right down here on a structural basis, a 36.50 limit buy. This to me would be the best place to get long. Housing numbers, starts 1.028, supportive. Permits 1.035, supportive. Crude oil won't play, minus 0.7 million barrels. And then the FOMC minutes right here. So this is what gives us the trading range. And I think these numbers right here take us up to the top end, and will give us a chance to sell this failure to take out 53.50. And then if we blow through that, I mean, 60 would be the next stop. It's a strong market. Okay, the numbers that were put out yesterday, all over the boards, really came from this summer when we took out 2,000. This one individual said 2,200, 2,250 was the blow-off top. You know, you have to put something out there. Every one of you who trade, when you go to cocktail parties or social gatherings and people find out that you trade, the first question out here, their mouth is, how high is the stock market going to go? They don't really care about anything else. They just, you know, give me the bottom line. Then you can go on and talk about other things. And I mean, so much of the market is that way too. And so many people that get involved in this hope that somebody else is going to help make them a millionaire. And even when you run your own stock portfolios, you find that the probably the worst source of, least reliable source of information and good ideas comes from brokerage